Welcome to this episode of Credit Tea with me, brought to you by Free2Be TV. I'm John Whitehead. Today we're going to talk about how bill collections really work. But let's get one thing out of the way. The National Bank Act of 1864 and the National Banking Act of 1933 prohibits banks from lending you money from their assets or from their deposited assets. What banks actually do is lend you your own money that you first lent them, meaning that your future self, by making payments, you are actually funding the account that you're going to use to shop or spend. By when you sign that contract, they actually monetize your signature, they put it into account, and then you have access to money or shopping and things like that. But you're actually the one that's funding the account. That money never comes from the bank. And when you actually default on an account after 4 months for contract debt like a phone service, or after 6 months for things like credit cards, the companies actually charge the debt off, which means that at that point, they can be made whole again. So after 3 months, if you owe Capital One, if you owe AT&T, you can't pay the money back anyway because it goes to collections. Now, prior to that, the contract is actually void that you have with these creditors anyway, because one of the 4 elements of a valid contract is something called full disclosure. They never disclose to you that they actually have multiple insurance policies on your debt. They know, okay, he has a 450 credit report, so it's all likely that this guy is going to default on his loan, so we're going to get 3 or 4 insurance policies from different agencies to be made whole. So it's just a big money making scam. After 90 days, the law says that these companies have to file an insurance claim. And they never tell you that you're actually the one that are paying the premiums on that insurance, so that voids the contract initially. And then at the end of the year, these companies get a tax write-off or a credit or a deduction. Then they turn around and sell your information, not the debt, your information to bill collectors for about 30 cents on the dollar, but actually they just buy up a bunch of names, a bunch of social security numbers, a bunch of amounts on a spreadsheet. Remember, once a bad account goes bad, just like in a banana, once a banana goes bad, it's always bad. Once derogatory, it's always derogatory. If you pay it off, it'll say paid, but it's going to still be a paid derogatory. And also what you're doing, if you just feel the Holy Spirit and you decide that you want to just be moral and pay off this bad debt, is that once you do that, you're resetting the date of last activity. Let's say you have a 6-year-old bill and you decide in the 7th year that you're going to pay it off. Okay, now you're resetting the date of last activity on that account, and that means that for another 7 years, you're going to have this thing affecting your credit. A lot of people say, well, you know what? I'll just write a letter saying that I have no contract, and then you keep writing and you keep disputing with the agencies over and over again. I have no contract. I have no contract. Well, if you keep saying that, after a while, they can block you. They're going to send you the dreaded frivolous letter saying that, we've already done what we're going to do this, and for the next 6 months, there's nothing that you can do about it. The best thing that you can do in any situation is to pick out the errors in your report. For example, is there a notation on your report that it says that you disputed the information? Is this notation still on your report after 30 days saying that this information is verified, the customer disputes, and the issue is resolved? Well, if it's been resolved, then you need to demand that they send you proof. The Fair Credit Reporting Act says that they have to prove it or remove it, and you can do this by demanding validation, not verification. Verification is only proof of your name and your address, but validation is documentation proving that you owe them, the bill collector, and they have to send it to you in the form of a sworn affidavit, which they never do. You also demand the original contract, which they never have, with your wet ink signature, with your signature, and an authorized signature of a representative of the bill collector's company. They're not going to send that to you because they simply do not have it. Ask them also, can you provide a full accounting, showing every charge, every entrance, every payment, even the insurance monies that they received around on your account. Are they able to do that to you? They tend to show you these billing statements trying to show you that is verification and validation, but it's simply not. You have a charge off that shows a balance and also a past due amount. The law says that once something is charged off your account, the balance is 0. It cannot have a past due amount, but if you look at the charge offs on your credit report, they always show a past due amount, but that is totally incorrect, and you can dispute that best with the collection agency and the credit reporting agency. All right, well, if you have any other questions or if you would like more information about how to repair your credit and take your credit to the next level, you can always write me at credittea@mail.com. I'm John Whitehead for Credit Tea with me, brought to you by Free2Be TV. Have a good one.